Well, howdy there, folks. Boy, do we got a lot to talk about in today's video. There's so much transpiring in the market right now. There's so much happening that I want to show you through the course of this video that's going to blow your mind in regards to many various things that are going on out there. Some very weird trading activity. Let's just put it that way, that I want to show you guys here today, where certain stocks, you're looking at these and like, what is going on here? Like, why are these stocks making these sorts of moves by these other group of stocks are making these sorts of moves? So I want to show you guys exactly what's going on here, kind of what's transpiring. Hope you guys enjoy this as always. By the way, I'm going to have for the pinned comment down there, it's basically to sign up for our Hungry Bowl email newsletter. It's absolutely free to do so. Cole and Dieter rate that every day. And so if you guys are looking to keep up to date with everything going on in the market, earnings, the biggest news stories, things like that, without getting into politics and all that type of crap, definitely check out pinned comment down there. Sign up for that. It's absolutely free to do that. So I think you guys will enjoy it and you'll get a lot of value out of that. That will be pinned comment. So where I want to start this video out here is the good old Tesla, my Tesla. Tesla is down over 6% here today, and now the stock is down around roughly 40% year to date. Now Tesla has a lot of things going wrong for it, and one big factor just came out, and that came out right around after hours. So we'll see if that negatively affects Tesla stock tomorrow, where we'll get into that in just a moment. But Tesla has a lot going around right now, right, for negativity. One is the market's been in a very tough place. We all know that. We've seen that, how rough the NASDAQ's been, right? And Tesla actually helped pull down the NASDAQ here today. The second piece of this is China is a mess, and we're hearing reports out of China that, you know, Tesla's going to not ramp up the Shanghai factory as quickly, and people are wondering, well, is that because of restrictions, or is that because a lack of demand in China? You have everybody kind of running to a bunch of different conclusions in regards to that. The third thing, okay, and then the fourth thing we'll get to in just a moment, but the third thing is massive. So what this has to do with is Elon Musk and his Twitter situation is a massive distraction, and some people do not like how big of a distraction this whole Twitter situation, we'll just call it that, the Twitter situation between Elon Musk and Twitter. And people are like, why is Elon spending so much time, resources, and energy on this when he should be spending his time on Tesla, right? That's the way a lot of folks look at it. They don't like it. They don't like what's going on there. What I will say about this is Tesla, you know, I love that Elon Musk leads this company. As somebody that has, a pretty significant amount of Tesla shares, I love that Elon Musk leads this company. But let's be very clear. This is not the Tesla of 5 years ago. This is not the Tesla of 10 years ago or 15 years ago, when Elon Musk was like needed to spend every second on Tesla. Tesla is a massive beast nowadays that if Elon Musk was to retire tomorrow, I think Tesla would be just fine for the next decade. After that decade, we'll see. But Tesla's entire next decade, if not next 15 years, is completely already set up between the different models they have out now. They're already working on, obviously, the Model 2, the smaller one that should be great for the robo-taxi network. Like, everything's pretty much in place now for that company. He's gotten the company to that place that even without him, they don't need him to be there anymore. They got tons of money. They're in a great capital position, and obviously they're a very profitable company nowadays. They're just in a way different place than they were 5-10 years ago. But at the end of the day, a lot of folks look at this and they don't like it. And so you have to accept that Tesla's just in a really tough place when it comes to stock price in the short term. And based upon some of the comments out of Elon Musk here, basically what broke right around after hours, we'll see if that affects things even more negatively. That we'll get to in just a second here. Shopify, this stock is down about another 11% here today. This is a stock that, every time you think maybe it's coming back, it just drops lower, right? And, it was starting to come back, had a really good day on Friday, and then it just drops 11% out of nowhere. Out of nowhere, this stock just can't catch a break anywhere right now. And it's kind of what we're seeing out there. Apple starting to break down again here today. The stock has been flirting with going under $145 a share, and a lot of folks are looking at Apple and they're like, man, this stock's in its own bear market now. It's down over 20% year to date now for Apple stock. And the craziest part of this whole Apple situation, right? The craziest part of this is we haven't even had Apple report any troubling numbers at all, right? The stock has fallen over 20% year to date. We haven't had them say one thing bad about numbers. They've reported 2 A+ quarters in their last 2 quarters, essentially. Perfection. And you got to think, like, where would Apple stock be if they did not come in with perfection quarters the last 2 quarters? Would this stock be at $130 here today, $125, $120, right? And these are things you got to at least consider in going into next earnings, which isn't going to come out for another 2.5 to 3 months from now. But you got to think to yourself, man, like, what if they actually had any sort of bad number? Where would that stock price be? And so that's just Apple, and it's just kind of, it's another one of those stocks that's in a tough place, despite almost being in perfection. But then again, Tesla has been almost in perfection in regards to their last 2 quarters. But people are looking at that and they're like, no, we don't want it. And that's why it's down 40% year to date, right? NVIDIA, same exact situation. The NVIDIA numbers have been incredible. And this is a company, actually, if I recall, I think they're reporting earnings this upcoming week, if I recall. When it comes to NVIDIA, the stock price is not in a good place. And I don't know if that stock price will be in a good place anytime soon, unless we got a massive turn in the market where the NASDAQ really started moving up. Then NVIDIA is in a tough place. GPU prices are starting to decline more and more. Obviously, any products that are involved in crypto mining for NVIDIA have tanked through the floor over the last 6 to 9 months and are going to do so even more with Bitcoin being under 30K. It's just not good. And then, you see Ethereum price and then all the rest of cryptos. Like, it's not a good situation. Never mind, just the GPU demand is not there like it was a year ago or 2 years ago. And that's just the way it's going right now. And we'll see if things recover. But right now, it's not in a good situation. Okay, hold on. Now, speaking about stocks that are in a tough place, Cathie Wood, she finally, the Ark ETF has a really good day, the last trading day, right? And then here today, just awful. I mean, just awful. It's an obliteration out there, right? The ARK fund itself is down around 6%, but you're looking at many of our biggest positions. Twilio down 10%, Coinbase down 9%, Unity down 7.5%. You just go through the whole list and it's just down, down, down. And when it comes to ARK, the most incredible thing about this whole situation is ARK's been inflowing money like it's nobody's business. But even with all those inflows, like, these stocks just can't find bottoms anywhere. They just can't find bottoms anywhere. And it's like, how with all that inflow money, like I shared with you guys, I think it was in the video yesterday, how much money ARK's been inflowing, especially in the past week. And yet you can't get that sort of support. And you're like with ARK, you can't. It seems like it's impossible to get ARK to have a positive, like 3 days in a row, 5 days in a row, a week in a row right now, even with all those inflows of money. And you're looking at a lot of those stocks and it's like, where is the bottom? Like, where is the bottom for these stocks? Have they reached the bottom? Are they going to reach the bottom? It's absolutely incredible. And it's just in a very tough place right now. Now, Elon Musk basically said this at, I guess he was virtually in some all-in conference, right? And this came out right around the time the market was closing or had closed. And basically, Elon Musk says the U.S. is probably in a recession for the next year to 18 months, right? Now, we'll see, once again, this hasn't even really broke out there to the mainstream media yet. We'll see as this gets out there more and more to mainstream over the next 24 hours, what people think about this. You're talking about this is the richest man in the world who runs several different companies saying, we're in a recession for the next year to 18 months and saying it's going to be hard times. That's a situation where people are going to look at that from a few different angles, right? One, people are going to say, oh my gosh, maybe Elon's saying this because Tesla orders are drying up, right? That's what people are going to think. Whether that's true or not, we'll see over the next several quarters, but that's not a good situation. People are going to say, oh, Tesla's demand in the back half of this year and going into 23 is going to be weak. And so they're not going to hit all these numbers that analysts have and maybe the company has and things like that. They're not going to show that sort of growth. And so that's where people are going to jump to conclusions. And they might be right, they might be wrong. I don't know. But all I know is that's not a good situation that Elon's coming out and saying that. And I've gone on record as even a Tesla shareholder, and I've been worried about Tesla's back half of this year and especially into 2023. Tesla's had such a huge backlog of orders that's made the last couple of quarters look good. But what about 3Q? What about 4Q? What about 1Q 2023? Those are quarters I worry about, especially with interest rates going up quite substantially. And if we were to get into a recession scenario where a lot of folks pull back, obviously that's not the best thing in the world for Tesla. I shouldn't say it's a bad thing. That's the best way to put it. It's a bad thing. And that goes for all auto companies, right? Tesla's just one of many, many auto companies that would be negatively affected by that. So this is something that matters. It's going to matter to Tesla stock, the fact that he made these comments here, okay? Now, very strangely, you have some small caps making like positive moves up, right? And so this is where things start to get really crazy. So these are all core positions for me. A core position for me is a company that's a top 15 company for me in terms of money I have invested, especially top 10 companies. These are all core positions for me. Honest, Planet, Avant, Corsair. All of them having very good days today. Corsair up over 3%, Avant up over 4%, Planet up over 5%, and Honest up almost 8%. So very strange. It almost seems like there's certain shifts going on in the market where we're having a lot of these big dogs continue to just get hammered, and yet some of these smaller cap stocks are starting to turn, right? Because you see those stocks there that are all core positions of me starting to turn. Meanwhile, you got a Tesla moving down, you got Apple moving down, you got Amazon still moving down, you got the Shopify's, all those bigger stocks that Kathy Wood owns that are 5, 10, 15, $50 billion type market caps all moving down, and then you get some of these smalls starting to move up, and it's like, whoa, what's going on here, man? What's going on here? Well, it was interesting. So I've had CNBC on for the past few weeks, kind of as background noise when I'm doing videos and just doing research and things like that. And all of a sudden, I heard something, and they were like, "Oh, talking about small cap valuations." I was like, "Small cap valuations? What are you guys talking about over there?" Okay, and they pulled out this baby. Okay, so if you all you guys that follow me, you know I've been talking about forward P's on small caps for like months now, right? And how low they are, and how ridiculously unsustainably low they are, and all those sorts of things, right? And essentially, they actually were talking about this on CNBC here today, where, they're talking about valuations of all the stocks, but specifically they were talking about smalls and mids and how, they've just dropped through the floor in regards to valuations. And that's the moment we're in the market right now, right? It's not going to stay like that forever. And, you see a lot of these stocks make a move like they did today, right? The Honest and the Planet and Avant and some of those stocks. And you got to think to yourself, whenever we finally get a real turn in the Russell, right? I'm talking about a real turn where it's like sustained. The move in those stocks is going to be like something we've never seen, or at least I've never seen in the market, other than maybe March of 2020 after we bottomed and we went. I think the moves are going to be pretty darn epic in many of those stocks. When you can see on a weekday like today, some of those stocks making such nice green upward moves there, it's like, what's going to happen when this baby actually turns for real, right? And that's when I think we're going to see some of the most epic moves, especially in the small caps, we've ever seen in history, right? Now, China's a mess right now. I mean, there's talk about, population decline coming because there's so few birth rates now, and potentially a lot of long-term problems there. But also there's a lot of short-term stuff that's been very negatively affecting their economy. So, a lot of our U.S. companies are obviously impacted by that, because a lot of our big U.S. companies, the large caps, have big businesses in China. And some good news, I guess you can say, is Shanghai is supposedly supposed to end the Rona lockdown in June at some point. And China's a mess right now. That's what I will say about that. China's economy, the whole situation, it's not in a good place, guys. It's in a very, very bad place. And at the end of the day, this does have ripple effects to the United States. It to a limited extent, but it does have ripple effects because, like I said, a lot of our U.S. companies get substantial business from China. I don't care if you're talking about Tesla. I don't care if you're talking about Apple. A lot of these big dog companies, they get substantial revenues or profits from China. And if China's not in a good place, that's going to negatively affect those companies in a massive way. Companies that aren't affected by this would be companies like Meta, companies like Google. Okay, those sorts of companies are not negatively affected by this because they can't have their businesses. They don't have YouTube in China. They don't have Google in China. They don't have Facebook in China. They don't have Instagram in China because, obviously, I don't need to get into that whole situation. They're not allowed. Okay, now also simultaneously, it's crazy because I'm prepping the slide, and then all of a sudden I hear this guy. I don't know who this gentleman was. Somebody that runs some sort of a capital group. He was talking about they pulled out of China. They closed all their offices in China, and so that just shows you how bad of a place China's in right now. That these folks are like, we're pulling out of China. And they asked him, will you ever go back, and open up offices in China and whatnot? And what he was saying is, we'll consider that, but right now it's not even worth it for us. So, if you have, like investment funds and things like that, that just, they're like, we're closing our offices in China. We have no interest in being in China right now. That just shows you how bad of a place China is right now. And the numbers we see out of China, a lot of people don't even know how much they can believe those numbers. I mean, heck, we have trust issues with our numbers in the United States and the numbers the government puts out in the United States. Never mind China, okay? That's a whole other level. That's a whole other level over there, okay? And so of like distrust in, are these numbers real? The Chinese government releases and things like that, right? If you have trust issues with the United States, only imagine the trust issues you have with the Chinese government over there, okay? Now, this is very interesting because I definitely see folks that are looking at some of these stocks and they've been hurt massively, right? So something like a SoFi, the stock is down 55% year to date. The stock's gotten absolutely obliterated. If you've been long this stock for the last 6 to 12 months, you've obviously just been absolutely obliterated, right? And that goes for tons of stocks out there, right? And, SoFi is interesting. I listened to that conference call. Maybe the best or one of the best conference calls I've listened to all earnings season. Their numbers were absolutely incredible. This isn't a stock I personally own, so it's not like I'm trying to talk up SoFi because I own a bunch of shares or something like that. And I'm going to call it the way I see it. And I got to say, the freaking numbers from SoFi were ridiculous. And like I said, I really like the conference call. But the interesting thing is with a stock like this, people look at it and they're like, stock price down so much, I don't want to buy it, right? But when it comes to stocks, it's not about where the stock has been the past 6 months, the past 3 months, the past 12 months, the past 18 months. It's fun to look at whether it's up or down or hasn't done a thing. But at the end of the day, for your buying and selling decisions in regards to stocks, it should have nothing to do with the past performance of a stock. It's just more interesting than anything, right? For instance, SoFi stock in the last 4 or 5 trading days is up 42%. 42% in the last few trading days, right? So, if you were, let's say, averaging down on SoFi over the last several months, and you average down on that day, your shares are already up 42% roughly, right? Let's say you never bought into SoFi before, but you listened to a conference call, you liked the numbers, you liked everything they reported there, and you're like, I'm buying some. Dude, you're already up 30-40% on your shares, in that. And so people get very, very caught up into the stock price has been going down, so I don't want to own it because it's been going down and it might go lower, when it's just, that's not how you should look at this game at all. It's all about where if you buy a stock price today, it's all about where that stock price goes over the next 12 months, the next 24 months, the next 36 months, the next 48 months, the next 60 months. That's what matters in the end. All this, worrying about it could go down more short term or something like that. It doesn't matter. If you see a stock that's a great price, you got to go out there and purchase those shares regardless of inflation, deflation, the Fed, any of that. That's just a bottom line. You look at a stock like Honest, just in the past few trading days, the stock has bounced 26%. And it's not even like the Russell's done amazing over those past few trading days. Imagine if the Russell had been moving in a major way over the past few trading days. Imagine what Honest's gains would be then. What would it be, 40%, 50%, 60%, 70%? If the Russell had really been bouncing. So, this is what's very, very important. It doesn't matter where Honest has been. It matters where Honest is going over the next several years. Corsair Gaming, in a matter of just a few trading days, this one's up 20%, right? Corsair Gaming has been in a tough place for the past 18 months between stimulus ending, tough year-over-year comps, GPU pricing being insane, which has made a lot of people not even want to build, new gaming PCs, which hurts Corsair's business in a massive way because Corsair benefits huge when people go build those new gaming PCs and then buy a bunch of, accessory products from Corsair. So the stock and the company's fundamentals, right, have been in a very tough place for at least 12 months now. But at the end of the day, all that matters if you're buying Corsair is what happens over the next 12 months, and the next 24 months, and the next 36 months, right? Avant Brands, just in the past 3 trading days, the stock is up 36%. 36% for Avant Brands in 3 trading days. And Avant's not a company that's even looked at by the market because it's extremely small cap, but they are cash loaded to the sky compared to their market capitalization. Their numbers are ridiculous, triple-digit type revenue growth last quarter is insane. And 36% in a matter of 3 trading days. And so that's very important to kind of look at when it comes to these different stocks. And the way I kind of think about it, right, is let's imagine for a moment, I've been fortunate to meet and know a lot of real estate investors over the past several years specifically, and gotten to really know these folks. And if somebody's going to buy a real estate investment property, they don't look at it from the standpoint of, it could go lower next month, or I could buy it cheaper the next month or something like that. What a real estate investor is looking at is thinking about like, what rent could I get for this property? You know, how much will likely appreciate over the next 5, 10, 15 years if I hold it? Things like that, right? Versus what they're putting out there today. They don't worry about, well, it may go lower next month or next week or something like that. But in the stock market, people do that, and it's a huge, huge mistake. And so I think the right way, in my opinion, to invest in the stock market is similar to how folks invest in real estate, where they say, where's this asset going over the next several years, not where is this asset going over the next several weeks. Because you're going to end up waiting and waiting and waiting and waiting for some of these stocks, and you're going to miss some, absolutely incredible gains. And you don't want to do that, obviously. And at the end of the day, if it's a great price and you're going to make a lot of money on that, you've got to take advantage of that deal. And if it drops lower, you'll be able to pick up some more shares as long as your income's more than your expenses on a monthly basis. And if it's not, then that's the number one thing you need to focus on before you focus on buying stocks or real estate or anything like that. I don't care who you are. The most important thing financially for every single person watching this video is having income more than your expenses. And I don't care whether you make, a few $1,000 a month or you make $10,000 a month. It's always the most important thing for a real estate investor or a stock market investor or a crypto investor, anything like that. You got to be able to buy the dip. And if you see a great asset for super cheap, cool, you can pick up more shares if it drops even lower. But you can't pass up on deals that are right in front of your eyes. You're going to miss a 20%, 30%, 40%, 60%, 70%, 100% type moves. And those are what hurts the most. People think sometimes it's going down on positions that hurts the most. No, not for a real stock market investor. Maybe for somebody that's not really about this life, but for the ones that really are into this, the ones that hurt the most is if you pass up on a great deal and then watching that stock, that real estate property, whatever, appreciate greatly over the next year, 2 years, 3 years, 4 years, 5 years, and you're like, I could have bought that, but I wanted it for 6% cheaper than it was just because I thought it might go down more, because we are in a tough market or something like that. And that's not the way you do it, man. That's not the way you do it. And that's not the way anybody who's built insane amounts of wealth, none of them did it that way. So hope this video helped you guys out. And let me know what you think about these markets. Much love and have a great day. Don't forget to sign up for Hungry Bowl newsletter. That is the pinned comment down there. Peace.